Welcome to your daily market briefing. Here are the key headlines shaping today's markets. 1. Gold surges past 5,500 as dollar credibility unravels. 2. Apple earnings spotlight intensifies AI spending debate after mixed mega-cap results. 3. Emerging market central banks signal easing despite persistent inflation pressures. After the headlines, you'll find a global market snapshot and a forward calendar of what to watch. Before we turn to today's stories, a short introduction. Daily Market Briefing. Think ahead, every market day. Subscribe to stay focused on what matters. Please keep in mind that all content in this video is for educational purposes only. It provides market context, not financial advice. 1. Gold surges past 5,500 as dollar credibility unravels. Primary asset classes impacted. Precious metals, gold, silver, copper. Dollar index and USD crosses, EUR/USD, USD/JPY. US Treasuries, entire curve. Global equities and EMFX. What happened? Gold blasted through $5,500 per ounce for the first time, extending its rally to 9 consecutive sessions after Trump called the dollar's decline great and Treasury Secretary Bessent's strong dollar affirmations failed to halt selling. Silver hit fresh all-time highs above $120, while the dollar index hovered near 4-year lows around 96, despite brief volatility following Bessent's intervention denial. Why it matters? The dollar's persistent weakness, despite official reassurances, signals a credibility crisis in U.S. currency policy, undermining its traditional safe haven status and reserve currency anchor. Sustained dollar depreciation amplifies imported inflation risks for the U.S., complicates deficit financing, pressures foreign holders of dollar assets to reduce exposure, and shifts global portfolio allocations toward alternative stores of value, including precious metals, European assets, and EM currencies, raising volatility across rates, FX, and credit markets. Key numbers to remember. Gold spot surged to $5,584 per ounce intraday, up over 27% for January. Silver topped $120. Dollar index fell to 96, down roughly 11% over 12 months and near 4-year lows. EUR/USD rose back toward 1.20 after testing 1.19. USD/JPY traded around 153 following intervention-related swings. What to watch next? Markets will track whether Trump administration officials continue tolerating dollar weakness or intervene to stabilize the currency after speculative excesses. Further dollar decline could widen U.S. credit spreads, lift Treasury yields to compensate for currency risk, and support European and Asian equities and commodities, while a coordinated stabilization effort would reduce volatility, compress precious metal premiums, and restore some confidence in dollar-denominated assets. 2. Apple earnings. Spotlight intensifies AI spending debate after mixed mega-cap results. Primary asset classes impacted. Nasdaq 100 and mega-cap tech, APPL, MSFT, Meta, TSLA, S&P 500 growth stocks, semiconductor sector, USD, and tech-sensitive EMFX. What happened? Apple reports fiscal first quarter results after market close with consensus expecting $139.5 billion in revenue and $2.67 EPS, following mixed signals from peers. Meta jumped 9% after beating estimates and raising guidance, while Microsoft fell 6% despite solid results on concerns over massive AI capital expenditures. Tesla gained modestly after exceeding expectations but reporting its first annual revenue decline. Why it matters. Apple's holiday quarter performance and forward commentary will reset expectations for consumer hardware demand, services growth trajectory, and AI monetization across the sector. Divergent reactions to Microsoft and Meta highlight investor anxiety over whether AI infrastructure spending will generate sufficient returns to justify valuations, making Apple's results critical for sustaining market confidence in mega-cap tech leadership, Nasdaq momentum, and broader equity multiple expansion, particularly as S&P 500 recently breached 7,000 for the first time. Key numbers to remember. Analysts project Apple revenue of $139.5 billion, up 12.3% year-over-year, driven by iPhone 17 and services. Microsoft shares fell 6% after hours despite beating estimates. Meta surged 9% on strong Q1 guidance. S&P 500 briefly topped 7,000 intraday before closing flat at 6,978. Nasdaq rose 0.2% to 23,857. What to watch next? Investors will scrutinize Apple's iPhone unit sales, services revenue growth, greater China performance, and management commentary on AI integration across products and services. Stronger than expected results and optimistic guidance would reinforce tech leadership and support further gains in Nasdaq 100 megacap stocks and semiconductor names, while disappointing numbers or cautious outlook could trigger profit-taking, widen sector rotation, and pressure high-valuation growth equities across global markets. 3. Emerging market central banks signal easing despite persistent inflation pressures. Primary asset classes impacted: EM sovereign bonds, Brazil, South Africa; EMFX, BRL, ZAR; MSCI Emerging Markets Index, commodity-linked currencies, and credit. What happened? Brazil's central bank held the Selic rate at 15% as expected, but signaled it will likely start cutting in March, adopting a cautious tone while projecting inflation above target through mid-2027. South Africa's Reserve Bank decision on rate policy created a close call, with economists narrowly split between a hold at 6.75% and a 25 basis point cut, as officials weigh a stronger rand and improved inflation against growth risks. Why it matters. The dovish pivot from Brazil and potential easing in South Africa reflect emerging market central banks' willingness to prioritize growth support over inflation targeting, particularly as dollar weakness eases import price pressures and improves terms of trade. Accelerated rate cuts would support EM sovereign bonds, local currency debt, and equities, but also raise concerns about policy credibility if inflation proves stickier than expected, potentially widening spreads, pressuring currencies, and complicating capital flow dynamics across the asset class. Key numbers to remember. Brazil held Selic at 15%, highest since July 2006. Inflation expectations stand at 4.5% for 2025, 4.2% for 2026. South Africa's repo rate sits at 6.75%. Economists split 13 to 11 between hold and 25 basis point cut. MSCI Emerging Markets Index surged 1.83% to close at 1,556.80, benefiting from dollar weakness and risk appetite. What to watch next? Markets will monitor Brazil's March meeting for the size of the first cut and South Africa's February inflation prints to gauge the scope for further easing. Aggressive EM rate cuts combined with persistent dollar weakness would support capital flows into emerging market assets and commodity exporters, while renewed inflation surprises or abrupt dollar stabilization could reverse gains, widen credit spreads, and pressure EM currencies against majors and the trade-weighted dollar. This global market snapshot is designed for quick reference. You may pause the video to examine the data more closely. This forward calendar section is designed for quick reference. You may pause the video to examine the data more closely. Thank you for watching today's briefing. In markets, understanding the field matters as much as making the move. And that's the perspective we aim to provide. Subscribe to Daily Market Briefing and turn on notifications to stay focused on what matters every market day.